Well, guys, it looks like PayPal may finally be a quality compounder. Why is that? Well, the stock's going up. That's why. But all kidding aside, Alex Chris, I think, is doing a great job as CEO. Last earnings release was pretty impressive. It seems like maybe the market's finally realizing that. And they recently announced a partnership with, I think it's Adyen or something like that. I probably am pronouncing that incorrectly. But they're going to be partnering with them on the Fastlane checkout. Perhaps the market's responding to that news. I saw it on Twitter from the man himself, Alex Chris. So exciting times ahead for PayPal. I was told when I got into this stock around the $59 price point that it was a dead business, a race to the bottom and not going anywhere. So interesting to see how things are developing now. The first thing that always interests me when it comes to PayPal is for a dead company, their top line sure does seem to keep going up and to the right. Granted, top line's not everything, but generally speaking, this isn't what you see in a business that is on the decline in any sense. So I tend to be skeptical of the people that say PayPal is a dead or a dying business and that the competition is literally destroying them and taking away all their customers, etc. That's not what it looks like. And with the relatively stagnant share price that PayPal's had over, the last, call it, year or so, you really like to see that they accelerate on the buybacks when the business itself is actually growing, but the price isn't, and the stock is pretty cheap. You like to see management taking advantage of that and really accelerating the buybacks and rewarding shareholders who are sticking around with a higher EPS number. Of course, some of these buybacks also help offset the stock-based compensation, which is pretty frothy from what I've seen. The race to the bottom argument came about because, as you can see, there was at a certain point a decline in the gross margins here. Part of that, though, is because Braintree, which is a slightly lower margin part of the business, has also been the fastest growing on the top line, which will sort of deflate the gross margins a bit. Alex Chris has sort of put out that it's a priority to juice up this number a little bit as much as possible. And you see it declined to as low as about 39% for a few quarters. And this latest quarter, we see a little bit of sign of life, jumped back up above 40% for the first time in a while. Could be coincidence, or it could be Alex Chris and some of his initiatives taking effect. I would rate their balance sheet as certainly healthy, at least. So this is net cash, meaning after paying off long-term debt, they would still have $650 million left in the bank. It dropped a little bit, probably a large chunk of that went to buybacks, which, with how cheap their stock has been the last few months, definitely do not have a problem with them spending some on buybacks, with the fact that they're still growing and they're still cheap. Now, they're a little bit less cheap now, obviously, so maybe buybacks won't be the best use in the next quarter or two to come, but they're still not like overly stretched by any stretch of the imagination. And considering the fact that they still have more cash than debt on hand, I think that you can probably safely say you're not at risk of some kind of a bankruptcy or something on PayPal anytime in the near future. At current prices on the typical valuation ratios, you have a price to earnings of 17.23, which is not terribly high. It's not like super, super low either, but for a company that's in payment processing and growing, again, that's arguably still pretty reasonable. And you have a price to free cash flow of only 10.5 and a price to operating cash flow of only 9.7. I've repeatedly said that I think Amazon and Google are cheap at like 18, 19 price to operating cash flow. PayPal is like half that. So considering that they are still a growing business, I think that it's still, by that metric, pretty cheap. Now, there is a separation between those numbers and the PE. Probably a good chunk of that is the stock-based compensation, which counts against net income, which affects earnings per share, which affects PE. So if they can sort of rein in that stock-based compensation, or just keep it a little bit, keep it level, don't increase it, and still grow the earnings, I think we're still not at like a really bad level valuation wise. Analyst Consensus is, of course, sitting here at a buy. Now, a lot of this I don't think has been updated too terribly recently. I think with some of the good news recently, the most recent earnings beating, and with positive momentum on their side, you'll probably see some upgrades in the near future. It's funny how those tend to follow the stock price and not really much else in a lot of cases. There could be some analysts out there that are really doing a deep dive and basing it on more than just what the latest news is, but I digress. The high of 95 there, I don't even really think is that unrealistic, especially with the recent momentum they have behind them. It would be a little bit more than a 50% gain from my original cost basis. That's not ridiculous. I think though, if the stock got over $100, we're starting to get a bit stretched though, honestly, on the valuation. Low end of 60. I don't think you're going to see a lot of analysts predicting a $60 price in the next 12 months, considering how well Alex Chris is doing so far, unless he really falls off or they have a couple really stinker quarters in the second half of the year, which usually Q3, Q4, I would think would be better because you've also got like the holidays and stuff in there. That's just the sense I have of it, though. So this is the part where we sort of do the thought experiment in a DCF of what would it take to justify today's price. And the reason it's interesting to do this today is the stock is basically kind of at what I had come up with for what I thought the approximate fair price was back when I was initially getting into PayPal. So I was thinking like low 70s based on the factors I could see at the time. And now the stock has, after decent earnings and some positive news coming out, letting the stock price go up, we have kind of reached that point where now the price has reached what I was previously thinking the fair value was. And all that is basically we've got the trailing 12 months EPS with a 10% discount rate, add the tangible book value as they do have a good balance sheet, apply a growth rate, which I think you may even consider this growth rate conservative, 7.5 dropping to 5. It just depends on how Alex Chris really does over the next few years. Hopefully he knocks this out of the park and this ends up being a low estimate and maybe PayPal goes to 140. I don't know. But I do know that this seems pretty realistic. I mean, we've already gotten here price-wise. So I think it sort of validates what my thinking was at the time. And it's just now that the market kind of agrees with me versus before they had maybe more doubt and uncertainty on it. However, I don't think that it's overly stretched here. Definitely not looking to sell at this price range. I didn't get in the stock at 59 just to get out at 72 or 73 like less than a year later. I viewed it more as like a longer term thing because I think that they still have some good profitability levers that they can maybe pull and some potential growth avenues ahead of them, especially with Alex Chris. He's only been in charge for a short time, and I want to give him a chance to realize his full vision for the company. If you are in PayPal, make sure that you leave a comment below. Let me know what your cost basis is and what you think the fair value is. Also, join the Discord link in the description. We do discuss stocks like PayPal on there. Also, just a note, this is important. You need to follow me on X, which is formerly known as Twitter, at Mr. Macho Mog. I'm trying to get my first 500 followers on there. It's very important to me, so please help me get there. I have a blue check mark, so that's how you know you found the right one. Also, do me a big solid and make sure that you always like the videos for the algorithm and subscribe if you're not subscribed already, and help me reach 3,000 subscribers in record time. Really means a lot to me. Take it easy, everybody.